Hello everyone and welcome to today's video. So basically, before we begin, if you can please read the disclaimer. Understand everything shown in this video is for entertainment purposes only, and everything shown in this video is just my opinion. Please understand I'm not a financial advisor, so just pause and read the disclaimer once you're done and press play. So let's begin. Hello everyone and welcome to today's video. So in this video, I'm just going to look at Bitcoin again from a long-term point of view. And I haven't posted anything new in a couple of weeks, simply because what I posted in the last few weeks has come to fruition. You know, it's playing out as I expect it to play out. Currently, you know, we've dropped down to that order block. I naturally presume this being as a bullish order block where I expect normally price to rise. And if you look at the different scenarios that I made previously, what I was expecting is potentially price could come from this point, from the yellow line, to potentially move up and then drop to that bullish order block, and then potentially touch the bearish block at the top. Now we are at the bottom, and instead of following that yellow trajectory, we have followed the path of the red line where we have just tapped that bullish order block. Now, naturally you'd expect price to potentially bounce off here. So that's something that, you know, we could expect. However, it doesn't mean it has to do that. Okay? Not yet anyway. We could go further down and then make our way up. You know, that's entirely possible too. So now looking at it from sort of like this, we've also got a bigger channel in play with something like this, which is based off the weekly time frame. In this sort of channel, you know, when it was done previously, it was again, we had confluence to this midpoint. And we also had a fib pull, which was not this one over here. However, the other one I have is this one. And this was from the high to the low to the high. This showed we lost that 618 here. We've come down to this particular bottom, which is the bottom of the fib level. And currently we are at just below to around the 886 level. Now this also plays out well with the, you know, the trend line or the path that I've made where I could expect price to potentially go. Now the thing is, if we range in this area for a while and we lose this, then there is a higher potential for price to potentially go down a lot further. And what we're talking about is then this path could become invalidated and we could have, say, something else on the lines becoming a bit like this, where price may range like this for a bit, even potentially try to break up to this 786 level, fail, come back down, and then test the 1.133, and then literally maybe try to go up and fail. If this occurs, then I'm expecting price to dump lower to potentially tap this 1.127 level. And if this does occur, there will be plenty of panic, and there is the potential for the price to wick down to this bullish order block here, which also lines up with the 1618. The other thing I kind of also look at is, you know, I like to measure, for example, the fixed range tool, and I like to base it on from the start and to the end point, similar to a fib that I would potentially pull. So if I was pulling a standard retracement fib, so let's clear all of this just to make it a bit more easier to read. Okay. So once I've hidden this, if I load up a normal fib from here to here, showing that entire range. Okay. So if we're at, say, the 0.5 level, you know, we've tested that 618 here originally, but not from this high yet. So there is the potential to test that area. And if we bounce, great. If we don't, we break down. But what I'll then look at, do I have confidence with the 886? So I then potentially, what I do is go to the fixed range tool, and now you don't select it, from low to high. It's from any point in the candle, right? So it's based on from this point to a point where you want to check the volume. It doesn't care how high or low. Pardon me. So because the fib I pulled it was from this candle to this candle here, so I'm just going to pull that here, so you can kind of see, effectively kind of lost this point, and then with dropping down. So that's another thing to keep in mind. The other thing I also like to use in Confluence, which I haven't mentioned in my past streams, is I like using Exo charts. And in Exo charts, I'm also looking at the monthly point of control levels, and we have tested pretty much most of them. We've got one over here which was created from the previous month, which has the potential to line up with the scenario of maybe going up in terms of this path over here. However, if that doesn't occur, there is that lineup effectively where we could potentially come down from here to test these areas. And if you look at one of the lowest point of controls, you have an area, the low down of around 6,000. Not saying it's potentially going to go there, but I'll be looking at the next one around 19k. So if we do lose, this area here, considering we've already filled this, the main interest areas for me is the point of control at the top or the one at the bottom, right? And before I would target them, I'd need to have a plan on both to decide which way we can potentially go with the right amount of confluence. Okay, I'm not going to go in further details on this. This is stuff we do cover in our group and in the Discord. So I highly recommend, you joining our Discord, asking questions, and we're able to help you with that. Now, looking back at this, if we do bounce and go to this particular point over here, which is very similar sort of level if you look around here, for the 48,725, which is also, which is effectively the previous month pop. That's what that is. Okay. So going back to TradingView, so that's an area where I'd want to look at. Now, based on where I expect maybe price to go now, for me, these weekly candles don't really mean much, because we get them and then we get an engulfing candle down, or literally 2 weeks of downwards movement. So literally, this could be that one particular candle which we get, and then we get another move down. So this doesn't represent anything for me to get excited about for going long. So, everybody in the Titan Traders group has been, pretty much shorting the market. We do take longs, we scalp, we day trade, intraday trade, we swing, everything that we need to do to benefit from the markets, whether they're moving up or down. So in this sort of case, you could look at where are we, which is a key level. As I mentioned before, we're at the 0.5 level based on this fib level over here, which is this trend-based fib. Sorry, not this 0.5 level. This is the 886 level, but from this, the bigger fib is the 0.5 level. So you can see it's a strong area of potential support. Okay, if we add all of these up, you have the 886 from the trend-based fib, you have the 0.5 from the retracement fib, and at the same time, if you look at the bigger fib, pulls from this low to the high to the low, you effectively also got the 0.133. So that's where we're at. So if we are able to hold this, great. If not, then I target lower, and the next level down where we have nice bit of confluence is the 618 level with the 1.133. So I'd start looking around in that sort of range. Now locally, if you are sort of trading this, The way I would look at this is effectively the trend in this sort of in this fib pull. I would target at least the 618 to the 786 level, hence being bearish, especially after you lose the 382 level. Now, if we go down to the daily time frame, even though we've had these green days, there isn't much to convince me to say yes. The volume is particularly high, and it's moving up. No, it's very weak. So the bearish volume is a lot higher than the bullish volume. So this bullish move doesn't mean too much to myself at the moment, unless we were to recapture, potentially the 382 level, which currently looks like to be very tough, simply because as we break down, we test each level. Okay, so now looking locally on the daily, the way I would look at this or potentially trade this is like this. So you have this fib pull over here from the high to the low, and currently you can see we've struggled to break above the 382. We did spike to the 0.5, kind of, you could say, swing failure sort of pattern, and the reason we also went there was also a 4-hour order block, which was nicely sitting at this point, a nice area of liquidity, which was taken out. So there is a potential to retest it again, and obviously naturally you'd want to target this 618 zone. However, as we have gone down, we have rarely tested the 618 on the 4 hours as the price has shifted down. Most of the time it has tested the 0.5 level, and sort of based on that, and struggling to break above the 382 level, I'm looking for areas more to the downside, also coinciding with the bigger time frame. So in this sort of case, the other sort of fib that I would pull from this in regards to a trend-based fib will be from this particular high to the low and to that high. And looking at it locally again, we're testing potentially the 0.133. So hence the importance of breaking out of this area to create a reversal would be nice, but I'm not expecting that. And as we haven't tested the 618 lower down, there is the potential for price to fall down to at least around 33 to 32 K level. Now, if I'm following this entire trend-based fib, if you look at it, you've got the different levels going down to the 886 being just below the 30K level. And if we then match that up with the higher time frame, you can get effectively correlation. So as the price moves down, you've got the 886, nothing really there in terms of confluence from the higher time frame fib, but you do have it for the 0.1 to 1.13. So that's something you might want to look at as a potential target. The other thing you also want to see is if we do go to the 886 level, potentially we could stop, as this is an area where a lot of people would look at this as the typical support. I don't use the natural levels of support and resistance where people match up on how many times things hit. I don't trade that. I don't personally believe in it. So just looking at it from that point, I would most likely target the more deeper lows, as they will tend to cause more pain. So am I bullish? Not really. Why am I not bullish? Well, looking at the market, considering how much we have dropped, from the all-time high up here, the market came all the way down 52%, right? And, yes, you could have the argument we had a similar drop before from here to here. It was 55%, it was bigger. And then, we rallied up 140%. But thing to keep in mind in terms of the movement down would always seem lower in percentage than the movement up. But in reality, if we do trace down 50%, that is effectively eating away all the gains that we got from the pump previously. And going also back, looking at the previous back testing of the previous all-time highs, we tend to like to drop to around the the 886 level. Many people have effectively been marking these levels and assuming this area to be a potential bottom, because there's they look at this and they say, well, that's the 886, that's the bottom. But what I've never seen anybody else do is why they do not mark it from here. Some people will say, well, that is where the the entire move was. Yes, it was. However, my argument can be, if that's the low to the high, we've come back into that range, that particular fib range. So in aspect, we did not break out of it, and this is only 1.133. So as we've come back into the range, then I would readjust my fib to that new high, and you can see we have nice line up and nice confluence on the ranges. So based on that, I wouldn't count the 886 to be rather here. That's why I'm counting it to be right here. And I rather plan for both scenarios than to go all bullish here, assuming we're going to just pump from here, and the next thing price dumps all the way down here, and everybody's effectively wiped out all their gains. So I like to plan for both, and that's what I'm trying to do. And looking at these levels with the levels shown to me on Exo charts are very good. So I'll highly recommend using Exo charts and joining their Discord and checking out their the videos that have been posted online as well. We also have videos in our course which go through Exo charts, and we do use Exo charts quite a lot, especially in the VIP area. So that's the sort of thing I'm kind of overall looking at. Locally, a lot of guys in the team say, guys, we predominantly have a lot of males who trade. We do have some females in the group. That's not saying that, but if you are trading this, I'm looking at this as a little range locally, so maybe from around here to that low, and just effectively trading this, and you could potentially build this up as a channel and trade that from a high to a low area, and you could easily do this. Let me load this up for you, like a parallel channel using the 886 level, like this, down to the 236 level. So if the price ranges in that sort of area, you have a little channel where you can trade, potentially shorting the tops and even longing the bottoms. I personally don't like to long these bottoms as much on a downtrend, simply because if we are we have the potential to reverse to go to the level below. So most of my trades are then taken up based on predominantly more shorting. But however, if I see the price ranging potentially up to the 4-hour time frame, and then I would then potentially long as well for the shorter moves, and you can see there's some nice gains to be had. If you're potentially even scalping, from the midpoint to the high, and that's a 5.79%, and obviously from this midpoint to the low, literally almost the same. So if you're trading this on a day-to-day basis, it's a nice little range to long and short until we attempt a potential reversal. And reversal, like I said, I'm looking at around 43k. Otherwise, most likely in probabilities we'll go down more. So that's the type of sort of trading I'd be looking at on the lower time frames. Do like the video, do share. I will put more content out, and just been very busy doing stuff in the group, and that's really it. So I will try to post more videos. I can look at other coins. However, keep that in mind that if Bitcoin carries on moving down, the other coins will suffer. And I also recommend people not to ignore the Bitcoin dominance as well. So if the Bitcoin dominance does move up, and you see Bitcoin price potentially moving up, it's not something I consider to be very bullish, because effectively all it means is the alts will dump. Price comes out from the alts, goes into Bitcoin or potentially Tether. And, when most of it goes into Bitcoin from the alts suffer, Bitcoin price tends to rise, increasing the overall dominance because people are buying it because they see Bitcoin being the more stable asset. But when you then get the heavy pullbacks, that money will come out from the market and probably go into Tether or maybe even cashed out the market. So it's not a healthy cycle. What you really want to be looking at is either the Bitcoin dominance moving sideways or potentially down, with the Bitcoin price ideally moving up. And if you see the dominance, dropping, Bitcoin price potentially moving up, then you can potentially get a faster price move up on the alts. And that's why if you look at some of the alts, they've hit real hard bottoms. If you look at XRP, for example, if we look back from the 30th of April, this is on Bybit, you can see we've had massive dump. So if I take it from the real low here going to the top, we're getting close to the 786 level. If I take it from here, you can say we've already touched the 786 level if this is the impulse. So that doesn't look too great. If I look at, say, BIT, which is a coin on Bybit, looking at it, the price has dropped below the initial launch price on Bybit. So looking at it from that sort of point of view, we're down very, very hard. So I wouldn't class this, getting into any sort of alts. If you are in any alts, the thing I would look at is if you've already taken the big hit, the big dump, and you want to cash out, considering you didn't cash anything out or took any profits on the highs, and the market has already, dropped down by almost 70 to 80% on alts, you could potentially just hold them. But keep in mind, I'm not a financial advisor. So, if this ends up being a nice bounce area, nice area for accumulation to go long, it could be a nice area to potentially buy some more, right? But that is obviously at your own risk. And, those are the things you do need to look before making that decision. Now, if you look at Tezos, literally almost exactly the same thing. From this low of here, we moved up. We've, dropped 88.6%, from the high. So, and this is, I feel for anyone who's, bought at the top and they're still holding. And you do have some coins that are doing better than others, but they're still falling. There isn't anything I look at and turn around and say, ooh, it looks great. EOS just, don't even ask how bad that has been. So, Litecoin as well, not doing too great. Hasn't potentially dumped as hard as some of the other coins, but it has dropped significantly. Well, come down to the 786 level. It could go lower. Again, looking at Neo, on Neo again, from the impulse, maybe from here to the top, we've dropped below the 886. If you look at it from the low, it's again 88.6%. So, what you really need to understand is, do you class this drop, this retracement down, losing 80% of a value of an asset, and you still class that as a bull run? you have to be mad. A bull run is where you see the price making higher highs and pumping. We weren't making higher highs, we were making lower highs and lower lows. So pretty much most people online still tell you, yeah, it's a bull run. I don't see this as a bull run. You know, for me, this is bear market territory. You know, the alts have dumped. Could they dump lower? Of course they can. You know, look at Solana. It used to be a 3-digit asset. You know, looking at from this impulse here to the high, we've tanked hard. You know, we are very close to coming down to the 786 level. Can you imagine? You know, having an asset you've been holding is worth $259, right? And now it's worth $91. You know, because you believe it's still a bull market, or you don't take your profits. I'm, you know, are you gonna be believing that this is effectively a bear market once, you know, just say it retraces down to the 88.6 level? If Solana becomes $49, are you then going to believe it's a bear market? Because, you know, your coin that you've held has lost over 80% of its value. The key thing to understanding about bear markets and bull markets is to see them and take advantage of them when they start. When you had the dump, when you had the drop, the low, for me, that's the initial start of a potential bull market, because that is the time to accumulate and everybody sells at that point. So, you know, yeah, it's no point, you know, you sell the low, you buy the high, you know. That's the typical standard way of retail trading. What I personally do, when people are scared, when people are selling hard near potential bottoms, you know, I could get a potential discount of 80+% on an asset, you know, and then take that on a long position. You know, if I buy Solana here and then it pumps, I don't know, 500%, that is a bull run, right? This was a bull run, yeah? This is not a bull run. Understand that's 68% from the overall low to the high, yeah? And overall, from this particular low to that high, that's an increase of 1,140%. So you have effectively lost, yeah, if you bought over here, you have lost approximately 64% of that entire push up. That's how I read it. That's big amounts to lose. If you bought here, you're alright, but most people didn't buy here. They bought over here. And they're deep in the red. So it's also very important to understand how the percentages work. Anyway, enough of my ranting. I will go out, you know, and make more videos. Hopefully I have more time. I can go over more coins, potentially strategies, looking at also looking at Excel charts and other, you know, trading methods, and yeah, and I'll post them. So please like the video, share it, support the channel, join our Discord channel, and if you are going to trade and you are going to trade leverage trading, please use my link. You know, it helps our group, and it costs nothing to you, and you will get you get rewarded a bonus, and the bonuses that you get are literally the same for every person's affiliate that is pushed out on YouTube. So whether you use mine or anybody else's, you will get the same bonus. It's just that you help, you know, the smaller group who provides unbiased, you know, critique and comments on trading. So, you know, I don't hide any of my fib levels or anything, you know, and I want people to learn from it. Anyway, thanks again, and I'll catch you in the next one. And sorry for making this video long. So thank you again for watching the video. And the disclaimer one last time, please understand everything that was shown in this video is not financial advice. It's for entertainment purposes only, and it's just my opinion. Okay, thank you again. See you in the next one. Bye bye.